right, yeah, let's get things kicked off. We're talking about node operator standards, and I couldn't have thought of better kind of a guests to welcome on stage as a representative from Kiln, Blockdaemon, and Obol. Yeah, so do you want to give us a quick intro to you and your project? If you've been living under a rock and you don't know who these guys are, they'll give you a short intro.
Cool, thanks for having us. I'm Tom, I'm the co-founder and chief operating officer at Kiln. We are a digital assets rewards management platform. So we enable businesses to earn rewards on their digital assets or to white label earning functionality into their product. So we have about $9 billion staked with us. We're leading on Ethereum with over 4.5% of the network staked with us with 50K validators.
Cool. Andrew?
I'm Andrew. I'm Blockdaemon. I head up our international business. I'm not Freddie. I think I'm better looking than Freddie. You can let me know later. So Blockdaemon, you know, we're one of the largest institutional players. We're across blockchain access, staking, and some MPC technologies. You know, for us, you know, we've been at this for a long time. Very institutional focused. We work with top banks in the US, the largest custodial players, and you know, very institutional focused. I cover APAC and you know our international markets, yeah, keen to get into it today.
Hey everybody, it's great to be here. I'm Juan. I'm a protocol specialist at Obol. We are focused on scaling Ethereum through the deployment of distributed validators. It's great to be here. Thanks for having us. And yeah, we're going to be talking about institutional staking today. So yeah, very excited to be here.
Cool. Cheers to the intros. Yeah, let's flip Freddie for our speaker on stage as well. So I mean, let's get started. I mean, let's set the scene a bit, I think, before we dive into the deeper stuff. So let's discuss the current landscape. Why is institutional adoption of staking gaining momentum? And what are the main incentives, do you think, driving this institutional adoption? Yeah, I mean, we can kick off with you.
Yeah, so we've seen really a growing interest in ETH staking since the merge in September 2022, and then the Chapel upgrade, which enabled users to stake in April 2023. There is strong demand for ETH staking, consistent ETH flows into this. And so now our belief at Kiln is that this is going to grow even further with the launch of staked ETF in ETH. So we've seen this in Europe. Actually, Europe is pretty much leading the way. So we've just announced a partnership with Vranjes for their Solana exchange trading product, where they will enable their users to earn rewards on their SOL tokens, and they will stake with Kiln. And we're actually pretty optimistic about the change in the US administration. Obviously, some crypto ETF have been improved recently. We think that this will pave the way for the inclusion of staking into this ETF in the US.
Yeah, Andrew, what do you think?
Yeah, so for, you know, the word institutional is a really broad term. So for us, you know, we work with customers like Microsoft, BNY, Andreessen Horowitz, you know, and, you know, in APAC, many customers, GMO in Japan, SBI, etc. So I think, you know, what we're seeing, many of the ETF providers as well, you know, we're seeing, you know, rapid movement, momentum. I've been at Blockdaemon coming up to 3 years now, you know, and we've been able to watch personally, the transition on what is staking, is this a finance thing? Is this a way to secure the network? Is it a technology operation? To very sophisticated, nuanced questions now around, you know, help me with the insurance, help me with the compliance, you know, how do I, you know, do the risk assessment of this as well? So, you know, I think there's a lot of players coming in right now, you know, with a lot of different questions and how they're thinking about things.
Yeah, sure. I mean, there's hundreds of proof of stake networks, and everyone has their own unique consensus mechanism. So yeah, it's a really good point. And yeah, do you have any thoughts on that?
Yeah, no, I just wanted to build up on what the guys have said. I think right now in the institutional segment particularly, we're seeing many structural tailwinds And probably one of the biggest catalysts at the moment is the election that happened on Tuesday. I think one of the biggest reasons why multiple, for example, ETF providers were holding off on submitting stake Ether ETFs was, for example, expecting a different administration, given that in the past couple of years there were like very constant attacks towards the crypto industry. Hopefully that's going to change, and yeah, we'll see a very bullish 2025 as it pertains to the institutional segment. I also think particularly the staking industry in general has reached a certain level of maturity. I think we've launched the Beacon chain now like 4 years ago, and if you compare how we were running validators back in the day to how we're running them today, I think there's been like a whole segment of evolution and innovation across multiple layers of the stack. So yeah, generally I think it's a very, very positive environment, and I think we're heading into a very exciting 2025, that's for sure.
Great, yeah. And I mean, I don't think anyone needs convincing here about staking, but it's certainly exciting to, see things progress the way they have, and we're here today, and the current landscape, political, whichever way you are, it's an exciting and interesting period, that's for sure. I mean, so let's dive now into more the operations and security. So, I mean, the uptime for validators is essential. And what specific like uptime requirements or like operational SLAs do you guys have in place to ensure that, validators and custodians work together to meet these expectations? And like, if you could talk a bit about that and how you do it at your respective organizations.
Sure. So at Kiln, we provide our services with like enterprise-grade SLAs with 99% uptime. And so our belief is that the closer you try to get to 100% uptime, the riskier it gets, because like you will try to build like failover systems which could activate without you wanting them to. And so our mantra is better down than slashed, because it's really asymmetric in the penalties. And so so that's why we aim for 99% in SLA. We also have insurances in place. So we have slashing insurance in partnership with Chainproof, which is reinsured by Munich Re, and cybersecurity insurance from Realm. And then other measures in place. I think monitoring and visibility of performance is very important. So we have built in-house an open source monitoring platform called Validators Watcher that any validator in the space can use. And they're used by some leading players, but also a lot of solid validators. It's available on Ethereum, Cosmos, and Near. And then like one last point is that we also rely on the community to help us improve our security procedures. So we have bug bounties of up to $2 million in place with Immunify and Cantina. So yeah, that's what we do at Kiln to cater to the needs of institutional customers.
Nice. Yeah. Andrew?
Yeah, and on the Blockdaemon side, so we've been at this for 7 years now, and our institutional customers, we're in a compliance framework that's usually looks a little bit more traditional, as an NDA, MSA, and then we're into those sorts of conversations. So sometimes we'll talk to a really DJing crypto native, and they're like, "Well, paperwork," But what we find on the institutional side is when you take them through that framework, that's the framework they know, right? And that's how they get comfortable, from a legal and compliance process, is it the most crypto native thing? We can debate that on, maybe on the panel or later as well. But so in there we unpack all of this as well. Like, and that's what institutions we work with are looking for, right? Just that clarity, certainty, and that's just written down, and it's gone lawyer to lawyer. So that's one. I think on the compliance side, I think one thing recently we're really excited about is the node operator risk standards framework that we've been working on with the Alluvial folk and Coinbase and Galaxy. There's a whole bunch of folk in there. So I think we've been working through a lot of certifications, ISO and SOC and all of those sorts of things, but they're more very general, right? Where like this is the first certification that specifically talks about node operating risk, right? And it's more specific as well. So I think that's something that's really interesting for us and our institutional customers as well. Yeah. And then, on top of all that, we were first to market with staking insurance as well. And, there's a few ways that can happen. There's a few ways to actually execute that. And then, but again, that's all kind of in a kind of, a master services agreement kind of like legal framework as well.
Sure. Yeah, makes sense. I mean, interesting, like if some of these newer chains that haven't hit mainnet yet are like say Chain, for example, are they looking at like ISO compliance or like some of these more crypto native chains? But yeah, I mean, did you have any thoughts on that, Juan, as well?
Yeah, no, I think from our side, at least at Obol, we work closest to the side of innovation. So as I mentioned at the start, that there is like a very significant maturity level that's coming to multiple layers of the stack, and we work closest to the software layer of the stack. And we at Obol are basically building a distributed validator technology, which essentially enables validators run today to be operated by either multiple operators on multiple machines, multiple data centers. And essentially what we have here is this new construct for validators, which enables better uptime, decreased slashing risk, client diversity, all these good things that generally they could in some ways be managed by operators in the past, but today I think we are making them easier to achieve. And yeah, generally I think it's generally just a matter of time, at least from our perspective. We will also be working very closely with the node operator risk standards group with Alluvial, but it's a matter of time, at least until DBT becomes a standard.
Great, yeah. And I'll just say a quick thing on this as well. So at Staking Rewards, we have our verified staking provider program, which has been running for 2 years. It's like, because we're like agnostic, chain agnostic, it kind of, yeah, we don't run validators as well, but we like have a 60 question questionnaire, and we work with node operators and liquid staking providers across the spectrum to really kind of do some of the legwork in that due diligence for our users. But yeah, just a quick shill there, which I think I have license to do so. But yeah, I mean, in terms of like the compliance and regulation side of things, like leaning into that a bit more, do you think as more like institutions enter the space, I know you've mentioned NORs already, which is like a really important thing for the industry, I feel. Do you think like for providers, I'm sure like you two for sure have ISO standard accreditations, and you have like SOC 2 maybe, or these, do you think these kind of like known standards are also important for providers? Yeah, like maybe smaller providers in the space?
Yeah, definitely. So currently at Kiln, we have chosen to focus on certifications which are recognized by the wider industry and third parties. And I feel like North is a great initiative, and we might be part of it in the future, but at the moment it's not deemed to be a priority at Kiln. So yeah, indeed, we have chosen to focus on SOC 2 Type 2, and now like the thinking is that there's really like a whole like laundry list of certifications that you could go after, like ISO 27001, like you could use the like NIST CSF framework and others. And then it's like always a balancing act between to which extent like you want to tick all these boxes, but because really it's just like an effort of like being like well organized with your auditor and having all your like policies written down. But I think it's also important just like to instead like take this time to focus on like actual measures which can reinforce your security, like beefing up the security team, teaching the team at Kiln about the importance of security practices. And I think that's also like something that has a lot of value rather than just like a pile of certifications. And yeah, like something else that we do, which we think is important besides IT security, is also the compliance side of things. And like Rach mentioned it when you talked about coming to customers with like your MSA order form, you have to do your KYB. It's kind of like unusual in the industry, but it's very important to do. So we have like a full like AML CFT framework that also covers sanction, data protection policies, and we very regularly engage with regulators so they understand how staking works and how other earning programs on chain work. So we meet regularly with regulators across the world and also engage with the Crypto Council for Innovation, which is a great public policy group. So yeah, I think like the right way to think about it is to have a like broad view on this, and it really like goes all the way from security standards to compliance to also like educating your teams and ensuring that your actual practices reflect the certifications you have.
Yeah, so I mean, it's like, it's not the most glamorous side of the industry maybe, but it's important, and it goes beyond just being a box-ticking exercise, I think. And yeah, I mean, it's important for Blockdaemon to have these kind of standards in place, I'm assuming, as you already mentioned. Do you have anything else to say on that?
Yeah. You know, and I think this space, you know, staking's a large market. For us, we're focused on the largest of the large players, right? So, you know, if we take a banking example, you know, we've got BNY, Citibank, JP Morgan as customers, some of these guys as investors as well. So we want to focus, like, you know, compliance and security, like on the institutions that, you know, are our customers and we want to continue working with. To your point though, like, you know, you were mentioning, you know, other parts of the market, they may not be focused on institutions, so, you know, like it's fit for purpose, yeah. But for us at Blockdaemon, it's really like, you know, like what do our customers require? Yeah.
Sure. Yeah, no, that makes a lot of sense. And I mean, Juan, I mean, a question for you specifically, I guess. How does this all fit in with DVT?
Yeah.
I mean, that's a very complex thing to unpack, but maybe just give us a kind of a broad overview.
Compliance and regulation, you mean, or?
Yeah, like compliance and regulation. How does that work with DVT? Are you guys looking at that?
I'm happy to provide some background here. So I think primarily for us, given that we're a new technology, it's been primarily around education. And that's also part of why we got involved with the effort with the Liquid Collective to basically be part from the start of building out the node operator risk standards and being a part of that. So I think, yeah, the first things first, it's like where people need to know what DVT is about, what it brings to the ecosystem, the benefits it brings. And from there, we can start to build out how it will fit that into, for example, let's say an operator at some point in time gets a certification that they are purely running on DVT or running on DVs. That at first needs to be understood by the industry. So I think we're at that stage still. Of course, making primarily our go-to-market efforts have been primarily focused on the protocols today. But yeah, as we start to target and focus more on institutional side, today it's primarily an educational effort. And from there, we were staying very close to everyone building these compliance frameworks, risk standard frameworks, and from there building upon the institutional segment for us.
Cool. Yeah. Is anything else? Or, yeah. I mean, so yeah, moving on to the next question. So yeah, Staker Rewards. We were born as primarily a staking data platform. We've evolved since then into more of a staking marketplace. But, you know, data is our core, staking data. You know, our API is used by Coinbase, Grayscale, and whatever. And we have reward rates and lots of data points on there. So, like, I mean, with insights and security regulation, like, out of the way and in mind, like, transparency is key for institutional clients. So I would imagine they expect detailed reporting for these kind of, standards. Like, what kind of monitoring and reporting do you provide to, like, institutional clients, and what would you, like, recommend to other staking providers that they kind of look at providing as well?
Yeah, sure. It's a tricky problem to solve because it's super hard to consolidate data on chain. I mean, as you know, right, you have a product around this as well, because you need to identify your rewards, your performance, your penalties across a bunch of protocols. So at Kiln, we've built a product. It's called the Reporting API, and it works across all providers for networks. So not only you can monitor the performance of Kiln validators, but you can also monitor the performance of other providers. And so we think that, I mean, since you're asking about how validators can monitor the performance, they can very well use this product. And that's also, like, very helpful for our exchange, custody, wallet customers, because if they want to expand the set of validators that they work with to include someone else than Kiln in the future, it's like really future-proof, and you don't have any vendor lock-in. And so that's really for our enterprise customers. And then to give back to the community, I mentioned we built this open source validators watcher for Ethereum, Near, and Cosmos. And so that's also something that solo stakers can use. That's something that we use internally at Kiln. So yeah, we want to give back some of the value that we create to the wider space.
Cool.
Yeah. And I think from the Blockdaemon perspective, we're always thinking about the institutional requirements. So, you know, you've got institutional requirements that, you know, it can be very traditional. It's like, hey, I've got to get all my rewards into a business week. I've got to close my book at 5 p.m. on a Friday. I need all the Epoch reporting. Like, you know, they literally are trying to bolt a very traditional kind of process on top of staking. Yeah. So, you know, I think, so we think about that a lot. And like, how do we serve that type of persona and their requirements? Because literally, like, then if a block traverse, it's 501, they're like, well, no, that didn't make it in business hours, like, you know, so, you know, and then they'll queue it up for the Monday, right? And then that's how they think about closing end of month. Yeah. So, you know, it is, you know, we are bolting into some, you know, very traditional processes here. I think conversely, you know, you can talk about then a more real-time kind of, you know, large, more crypto-native institution that is just 24/7, right? So, you know, you're back to what Tom said, it's a staking API they want to integrate versus the, you know, the former part of my conversation. It's probably a graphical user interface, a dashboard, pretty kind of like, hey, I want to pull the CSV file down, then I want to take it into my like financial workflows. So I think just thinking about the institution's requirements and making sure like you're meeting them and delivering what they want, whether it's, you know, a more sophisticated kind of API or whether it is some sort of graphical kind of interface, kind of fixed date timestamp thing, like, yeah. You know, these things are important. Time zone, local time zone, all of those things are really important.
So, I mean, like, it's more of like a white glove service offering to, yeah, individual clients and meeting their needs. Yeah, I mean, that makes a lot of sense.
Because regulation as well can mandate this as well, like, you know, so, you know, there's a whole bunch of reasons as well. Yeah. That, you know, we come across this all the time. Yeah.
Cool. I mean, in terms of Obol, like,
yeah, I think generally for us, what we have really invested in to really make the onboarding of the distributed validators very easy is we invested in what we call the Obol modular staking stack, which in essence is a suite of products that includes monitoring, includes the software for that basically enables DBT for the validator. It includes the Obol SDK. It includes Obol splits, which is a set of smart contracts that enable operators to basically split rewards across the members of the cluster non-custodially. And in essence, what we want to have once we onboard, you know, people into our software is this very robust stack of tools that they can use to run the distributed validators very easily. Now, one of the things that Toma mentioned as well, that was I think very relevant as well, is that today we really need to invest in building very robust data pipelines to, for example, assess performance. I think today one of the companies that's doing a great job on that front as well is Rated, which have basically enabled a standard for us to assess performance of different node operators. But we've also invested very heavily on this in Obol. We now have like after I think a year and a half of work, some very robust data pipelines, and we provide very robust monitoring to our customers as well running DVs. So yeah, I think this is something we're currently investing on, and it's like evolving. But yeah, we're proud to now offer the modular staking stack run by Obol, which is essentially this set of tools that make running distributed validators very easy and robust.
Yeah, cool. I mean, it's really interesting to see this like melding point of institutions and like crypto native people, and you guys are at the forefront of delivering that reporting and like figuring it out. So yeah, I mean, it's great to chat. And I mean, we're coming close to the end. We might have time for a couple of questions. So like institutional adoption requires like a seamless relationship between validators and custodians. Do you have any like examples of how validators and custodians like have collaborated to meet institutional needs, or how you work with maybe custodians? Like any specific outtakes or examples you could share?
Yeah, I mean, at Kiln we understand that the relationship with custodians is super important because like they're key to get institutional actors on board with crypto and with staking. In the way of specific examples, at Kiln we launched a partnerships team led by Elsa, who is in the audience. And the idea is really to allocate a lot of resources to custodians to help them integrate staking into their product. Not only that, but also to help them understand the benefits and mechanics of staking. And so a specific example will be just like teaching their sales team about how to talk about staking to their customers to ensure that they understand the value of it, that they literally like sitting on rewards that they are missing out on. by not staking their assets. So I'd say that's one key thing that we do in the way of partnerships with custodians, and something else is also just like innovating besides them. So that means telling them about innovations that we see in the space, such as restaking, BTC staking, but also getting the spotlight on like new assets, new protocols that we believe they should support, and also like equip them with the right wording, with the right points to go to their customers and chat together about it.
Yeah, Andrew, how do you work with custodians?
Yeah, yep. So, you know, none of the custodians are identical. So, you know, it sounds pretty simple. Hey, there's a regulator custodian, there's a large player, bolt-in staking sounds simple. But like the reality is they're all a little bit different. There's technology, there's regulation, there's process, people. So I think, you know, we're really focused on working out exactly how to work with them across those elements and making that successful as well. You know, we work with the largest custody players around, and the reason, even though we're up here and we're talking about APIs and like, that's like, hey, that only really works one way, right? But then when you're getting up into the custodial stack, there's some processes to work on as well to make it successful as well. And like Tom mentioned as well, there's the partnership angle and making sure like, you know, the end user that's institution that's in a custodial environment kind of just understands like what they want to do, right? And then how to execute that with their custody provider and out to staking as well. Like that's key, yeah. Because it's actually their assets, right?
Yeah, it makes a lot of sense. Do you have anything to add to this one? Or?
No, I think largely for us at Obol, we have worked primarily with the node operators because largely we've had discussions with custodians for a time, but generally we engage the most with the people that are running actually the validators. It really depends. There are a few custodians that actually do run the validators, but primarily they do have like a node operator partner who basically they don't really have like too many requests on how they're running their validators. So largely, I think they do control the relationship with the end customer, which I think it's something important for us to tap into. But yeah, we've been primarily working, I think, with the node operators from our side.
Yeah, I mean, so at the summit, we've got a whole bunch of different validators at different sizes, staking providers, and I think it would just be interesting to ask, like, I mean, I certainly find it interesting. Like, I mean, number one, how do we actually define an institution? Like, what segments like exist out there? And I guess it might be more of a question for you, Andrew. Like, how do you, when you like speak to these guys? Like, you've already spoke about the knowledge gap around staking. How do you actually talk to these guys? How does that relationship begin? And do you need to like handheld them all the way? Is there like a lot of like skepticism? Like, what's the market like out there?
Yeah, it's a good question. Look, there's always different speeds and different starting points, right? The word institution's a very big container, right? Again, for us, we're really focused on the larger end of that kind of spectrum as well. You know, the market, you know, more broadly has moved quite quickly on their knowledge as well, like on this front. But there'll always be something, because when Blockdaemon says institution, it largely means it's probably a regulated entity in a country, right? So there's always going to be that sort of unpacking. So, you know, on our side, there's a lot of discussion with regulators in an education kind of, hey, staking is a way to secure a network. It's a technology function, technology operation. I don't mean staking with my finance guy. Like, you know, there's always that conversation, right, that needs to be had and cleared out. And there will usually be nowadays probably a few folk in there that are kind of on top of it, but there'll always be, as you move through these large institutions, you'll actually go through different teams, right? And this is the way an enterprise process works, an enterprise sales motion. So you'll, you know, have to come back to these conversations a lot, right? Even if you've kind of got, you know, the head of digital assets at a large institution going, yeah, kind of, I got it, right? But hey, now kind of go and meet 8 or 10 other people that are on various stages of kind of this understanding. You know, it does remind me very much of you know, it's an enterprise sales motion. Yeah.
Right. So quite long lead times and pipeline,
Yeah.
Did you have any thoughts on that? From Kiln's perspective, like, I mean, when you approach institutions, like what's the kind of vibe you're getting, or like what kind of customers are you targeting now? I just think it'd be interesting for other staking providers, maybe that are in the room, to see what like some of the big guys are doing around staking, and approaching institutions.
So we spend a lot of time specifically with ETF, ETN providers. I would really second the point of it's very important to work hand in hand with the institutional actor, but also the regulator, because they will obviously like not launch if they don't have the conviction that the regulator will approve. And like we've seen like regulators being really forthcoming to understand staking products, well, specifically in Europe and in Asia. And we hope that with the change of US administration, we'll see the same in the US. Like they like generally just want to understand what's the upside of doing this, but they're more interested in the risks, in the like detailed setup, and they're able to go quite into like the technical details.
Mm-hmm.
So then it's like worth engaging, educating them, which we do both like directly and through other organizations, as I mentioned. We also like published a staking white paper. So it's like a 20-pager on the basics of staking, just to help them, to help regulators hit the ground faster. But yeah, I'd say that that's really like one key piece of the go-to-market motion for these players.
Cool. Yeah, I think we do need to wrap this one up, unless you've got something burning you need to say, Juan.
No, go for it.
Yeah, okay, cool. Thank you, everyone. Round of applause for the guests.
Cool.
Cheers.